Hey guys, welcome to another video with me, the Stunk Dad. Now, I've had a lot of requests making a video just as this, and I'm finally doing it, guys. I'm finally gonna sit down. I have a little bit of time, so we're gonna be talking about the MOC imbalance today. Now, I've done a lot of backtesting on the market on close imbalance for the last 2 months or so, and I finally feel comfortable making a video for you guys, kind of explaining what it is, and then also what I do in my trading strategy, how I utilize that data for my trading. So if that interests you, if that piques your interest, please stick around with me. It's going to be a good time, okay? So let's pull up the charts here. Okay, so before I talk about the MOC imbalance here, what you see on your screen, I'm going to be explaining what it is, okay? So MOC stands for market on close. Now, these are the orders given to basically everyone, but mostly market makers and hedge funds and stuff. They have their orders sent to the New York Stock Exchange 15 minutes before the market closes. So that's like, what, 3:45 Eastern time? And all those orders have to be in by then, and then the imbalance data comes out 10 minutes before market closes at 3:50. Now, what all these orders are is they all come in, and that's why you guys see the increased volatility the last 10 minutes of the market. I've always wondered why that is, why there's huge moves. And I always just thought it was because of volume, but there's a lot of orders that come in at the end of the day. Some people like to execute their trades at the very end of the day as close to the closing price as possible. So that's what that is. So all these large orders of the buys and sells that come in, they can cause imbalances, and that's what this data is that I'm about to share with you guys and show you. Sometimes there's a lot of orders to the sell side, and then also a lot of orders to the buy side, and then this data just averages all out together. Now, if there's a huge imbalance to the buy side, you guys can take longs given that data, and then on the contrary, if it's to the sell side, I can't talk. If it's to the sell side, you can take shorts based on that data. So what I did and what I've been doing lately is that data comes out for me every single day at market close, 10 minutes before market closes, and that's called the MOC imbalance, or we call it MOC. There's also market on open called MOO. But I haven't really done a lot of backtesting on that just yet. I'll probably make a video about that later after I get a little bit more data as I backtest that. But over the last 2 months, I've been monitoring this data and then also trading based off of that data. And we've found a lot of success in it. And I'm going to go over all of last week's days, so Monday through Friday. And we're going to be talking about how the market reacted to that data on this video. So what I've been doing based off of this data is when that data comes out, whether it's sell side or buy side, is I do one or two things. I first look at the data. Okay, this one is sell side, so I immediately think, okay, we're gonna go short based off of this data. Now, as you guys know, everything with trading, it all relies on your entry and then also your exit too. So I do one of two things when this data comes out. So most of the time I get in 5 minutes before the market closes. So at 3:55 Eastern. That candle, I've noticed from my backtesting the last 2 months, that singular candle usually moves the way of the imbalance. And we can talk about that and look on the charts too and see how it reacted just based off that data, okay? So that's the first thing that I usually do. Now, the second time, sometimes I do get in early. So if it's sell side like it was on the 5th here, August 5th, and there's a big candle to the opposite way of the imbalance, I tend to get in early during that time if the candle is opposite of the imbalance. And if that doesn't make sense, I'll explain it as we talk about the imbalance here. Okay, so we're going to be talking about all of last week's data. Now, I do think we had 2 losses and then 3 wins on last week, but our losses far outweighed, or sorry, our wins far outweighed our losses, but we're going to be talking about that, okay? So from my backtesting, it tends to have about a 75 to 80% win rate, just based off of the data that comes out at 3:50. Now, I do have live data that comes every day, and I'll explain that. So last week I didn't have the live data for Monday, I think, which is this day, but Tuesday through Friday I did have the live data. So we'll be talking about that. So usually here is where just the plotted data that comes out right at 12:50 my time, or 3:50 Eastern. So it was sell side here. So immediately I thought, okay, the market's going to be going short. So let's go on over to the 5th on Monday and see how the market react that last 10 minutes of market close. So let's go on over here. Here is Monday the 5th. Okay, so let's scroll on over here to the last 10 minutes. So these two candles here, these two big green candles, are the last 10 minutes of market close. Now, it said sell side here, so it was increasingly very, very, very wrong on Monday. You can see that we had a huge move up on the S&P 500 SPY ETF from 516 or maybe even 515 all the way up to 520. So obviously that was a terrible imbalance day, and I did take the loss with a $400 loss just based off that data. Now, I did not have the live data when this all came out, so it could have switched to buy side imbalance. I do not know because I did not have that data. Nonetheless, we took a loss on that trade. So basically I went short just given the minus 3.9 billion sell side S&P 500 imbalance, and then there's also, it all lines up. So I forgot to explain this a little bit more of what we're looking at here. So this is the imbalance between the indices here. So the S&P 500, the NASDAQ, the Dow, and then the Mag 7 or the Magnificent 7, or the top 7 companies. And I'll explain it more as I go to the next day. But basically what I look for is a large sell side or buy side imbalance. The S&P was 3.9 billion minus 3.9 billion, which is a lot, but you'll see smaller ones in the millions, of course. But those large ones I really tend to look for those large moves. Now, it did the complete opposite. But what I look for is all four of these lining up the same, basically. They don't have to be the same number, but the same side, basically. So you can see that it was minus 850 million, minus 635. So it was increasingly sell side based off of the NASDAQ and the S&P. Okay, so we're going to move on here. That was the loss on Monday. So let's go to Tuesday. So here's the live data here. So this is a little bit more pleasing to the eye to look at, and this moves in real time, and I stream this too in Discord for everyone to see. So right here on the 6th, let's move on over to Tuesday and see what the price did here. Okay, so here are the last 10-minute candles, last two 5-minute candles, I should say. These two right here, bang, bang. And you can see how sell side it was. So this says minus 4,029.5 million. It's basically 4.02 billion is what that is. So minus 4.02 billion sell side S&P. And then you can also see that everything lined up as well sell side. About 1 billion sell side NASDAQ. And then also these ones as well, the Dow and then the Mag 7. So what I did in this instance is I went sell side almost immediately. We could see a huge dump here. So if I move to the 1-minute chart, we can kind of see a little bit better of what happened on Tuesday. Oh, I guess I got to scroll all the way over here. Sorry, guys. Let's go to Tuesday. This trading view chart is whack. Okay, so what happened here, and all these stupid ads, man, I swear. So what happened here is when the data came out, big green candle up, and that's what I usually look for to get in early. You can see that we had a big green candle up, so immediately I was like, okay, we should probably short this, and that's when I did get in early. I'll have to see how much I made that day, but it pretty much went up, touched these EMAs, and then we pretty much tanked about 30 points on ES, which is a significant move to the downside, especially the last 10 minutes. And we caught that entire move down. Oh, I guess I only made $127. I take that back. But I do remember Wednesday and Thursday was a little bit better in this part. So it looks like it was switching buy side. I exited my shorts if I was in them 5 minutes after that. And I might have switched to buy side just based off of this data, and that's probably why I didn't make very much. But nonetheless, we did end up green $127 just based off of that. That imbalance there. Okay, so sometimes I do look at this data when it comes out, or as it comes out, and if it starts to move one way or the other really rapidly. As you can see here, we were at minus 4.02 billion sell side on S&P, and then we were only minus 500 million. So that kind of gives me an idea. Okay, I should probably exit my shorts if I'm in them, take my profits, and that's what I did here. Okay, so let's move on over to Wednesday's imbalance, and then let's scroll on over here to Wednesday's price action if I can. Oh goodness, it takes a long time with the 1 minute chart. Gosh, it's still going. Okay, we're almost there. Okay, here we go. So here's the last 10 minutes. Pretty much right when that data came out, we got that huge move to the downside, that big red candle. And you can see how it was also sell side right when that came out at 12:50 my time, 3:50 Eastern. It was at 1.25 billion sell side S&P, and then minus 400 million Nasdaq. And we caught that to the downside almost perfectly. Now, most of the time I don't get in right when that data comes out. I usually wait for a retest of EMAs or a kind of like an entry. So, and that's what it gave us here right at 3:53 Eastern. We got a retest of that EMA, and then we immediately fell back down and tanked another 20 points on ES. Now, I made $2,000 on that trade, which is a huge trade for me. And then I took my profits as I saw the imbalance go buy side, and it has been working out very well so far this week. So I'm net green on the week just based off this mock data. So let's scroll on over to Thursday. And I hope you guys are understanding a little bit of what I look for in these imbalance trades. Yeah, I hope you're understanding a little bit more as I'm going through this. So let's move on over to Thursday. Bear with me as I freaking scroll through all of this stuff. Oh gosh. Okay. Almost there. Okay, here we go. Here is the last 10 minutes of market close right here. So it looks like we were a little bit choppy up until about 55, 56 or so, and then we took off to the upside. But we were a little bit choppy once that data came out for Thursday. And it kind of gives you an idea of why it was a little bit choppy. So you can see that we were buy side 200 million, and then also sell side Nasdaq 120 million. So this is a relatively small imbalance. So this was only 200 million, and then this one was only 120 million sell side. So I would say that that's pretty neutral, and normally I wouldn't take a trade, but nonetheless it did work out. Towards the end of the day, we did take a buy side imbalance just strictly because it was buy side both S&P and Nasdaq, and we made $1,000 just on that trade there. So let's go to Friday, and now I remember Friday it was buy side, I think, or it was buy side, and then it switched sell side, and I think I took shorts on Friday and I lost. So just given the data, sometimes it is a little bit wishy-washy sometimes, especially with the live data. So you do have to be careful with that. So if we look here, you can see that it was buy side and then also just pretty neutral. And usually when I see flat imbalance like that, I say probably not getting into this one, probably not trading. But when it went sell side, I did take shorts because you can see how strong it was at about minus 500 sell side on S&P, and then also minus 330 sell side on the Nasdaq. So I took shorts just based off that live data, and what do you know, we got a huge reversal to the upside, which in that case I did lose $1,000 on that trade. So I net like about $800 last week. It was a little bit rough to say the least, but I wanted to give you guys an idea of how this data works throughout the week. and I'm going to continue to monitor it and see how well it works. But for the most part, I've been doing pretty well. I believe the week before was a little bit better. This week was a little bit rough just because of the flatness of it, and then also the switches of the imbalances, which that doesn't happen very often. But nonetheless, we did net green just based off of the strategy. It's been working very, very well for me. But yeah, I just wanted to share that with you guys on how I utilize this data in my trading. Hopefully you guys enjoyed that. If you guys have any questions about this, I can make another video going off of the market on close data. If anything confused you guys, please leave a comment down below, and I will definitely respond to you, and then also I possibly will make a video on it. But yeah, guys, that's basically what the MOC imbalance is, and then also how I utilize that data in my trading. Thank you guys. Leave a like and comment. Please subscribe if you guys enjoyed this video. I will see you in the next one.